Hi there, crypto fans. Dick Allgire here with a brand new set, a new backdrop. We've got a swaying palm tree today, looking out over the south shore of Oahu on a big surf day. We've had epic surf. It's been beautiful here. Today we're going to have a long conversation with Marty Hibbs, our CryptoViewing technical analyst, and usually Marty doesn't come on YouTube. I have to beg him, I have to twist his arm. He just doesn't do it, but he's doing a long form segment with us today because he's got a new feature, a new website, and some new services he's offering. So we're going to promote that for him and have an interesting conversation. It's always fun to talk with Marty because of the years of experience that he has as a trader, as a market analyst, and just his knowledge of geopolitical events. This is a wide-ranging conversation. We talk about the dollar, Bitcoin, gold and silver, and where the markets are going. There is one mistake we have to point out. At 42 minutes in, we're talking about buying some commodities options, looking at wheat and corn, and we misspeak. Marty says there's a $250 option that could potentially pay off $5,000, and we double checked that. We looked at the charts, we looked at the markets, and he misspoke. He meant to say $1,000, not $5,000. That's still a pretty decent gamble. I actually bought some of those options this morning, $250 in, and potentially can pay off $1,000 if corn and wheat go up, which we think they will. Anyway, enjoy this conversation. Hi, everybody. My name is Dick Allgire. I'm a retired TV newscaster and a reporter. Glad to be out of the business since it's devolved into opinion and propaganda. More recently, I've been doing remote viewing and involved in cryptocurrency. And that led me to my friend and colleague, Marty Hibbs, and his great new site, Bullshift 2020. Marty, how are you today?
Doing good, trying to absorb all the things that are going on, but doing very well, Dick.
Before we get started with current events and financial stuff and charts and commodities, for people who haven't seen your work before, tell us a little bit about your background in technical analysis and commodities trading.
Okay, so basically it's quite straightforward. I had a niche to get in commodities when I was quite young, and in 1986, that's a long time ago, I was licensed for equities, options, securities, and we have the equivalent of Wall Street. We call it Bay Street here in Toronto. When I worked on Bay Street, and mostly in the US markets, not in the Canadian markets, because I transitioned right away from equities into futures and options because I love the futures markets, the commodities. And that's been my home since then. So fast forward 30 years, I semi-retired. I was working as an analyst on BNN in Canada. It's called Business News Network, which is owned by Bloomberg, but they were bought out by Bloomberg. It used to be their own independent station. I was on there for about 3 or 4 years. And then I picked up a little gig with the Grain Farmers of Ontario, which is basically a group of farmers, 28,000 to be exact. And what I did with them is I looked after their hedging to do with risk management. And I had a contract there for about 5 years. And then the 5 years was up and I'm getting older. And I decided I really like what's going on, what I'm seeing in the commodities. And I think we're coming into a major bottom in commodity pricing. This was in 2019. So I created Bullshift 2020 right around the end of 2019, just before the pandemic broke out. And of course, the concept there, if you look at my logo, you'll see there's a bull and a bear, that we're going to swing from a bear market that we've been in for years to a bull market. And at that point, you saw what happened. Once 2020 drop came and went, commodities basically skyrocketed. We had lumber up 600%. We had crude oil go from negative $40 to $120. So it's been on a really big tear. And right now we're getting a good correction, but it's not over yet. Okay.
I became associated with you in early 2020 when you were doing some analysis for CryptoViewing. So we made it a regular thing. And I've been watching your calls on the charts of the dollar, the S&P, various cryptos, and you have been extremely accurate. And also, privately, you held my hand through my first entry into doing commodities. We bought some soybeans. And that worked out really, really, really well for me, Marty. I thank you.
Excellent. You're very welcome.
You're helping me with wheat and corn right now. But it was like you said, hey, Dick, if you want to have a little fun, we could throw a little money at this. I think soybeans are ready to make a run, and they're down right now. So we got on the trading platform. And you said, well, we'll buy this and this. I did. And I looked up, and I'd made like a lot of money. So
it was a good run. And now we're getting ready for our next run, buddy. So it should be a good one. But it's not an easy road. It's going to be very windy and bumpy along the way. And that's one of the reasons for Bullshift 2020. I really enjoy my analysis with you guys on CryptoViewing. There we focus primarily on cryptos, of course, because it's a crypto station. But I guess my love of my life has always been commodities, but we can't infiltrate the site with that. So we stick as much as we can to cryptos, and we throw in a sprinkling of the dollar, which is important, the equity market, stock market, which is kind of important, and gold and silver. Other than that, we don't fool too much with commodities. But I've really enjoyed it. It's been 2 years we've been together, and I feel like we've become very good friends, and I'm dying and looking forward, my wife and I, to get out and see you in Hawaii, hopefully this winter. So we're looking
I'm footing that. I'm buying that ticket as my thanks for Marty holding my hand through my my nice bull run in soybeans.
Interesting.
I made enough money, so I'm buying him a ticket and a hotel room. So
So right now, what I'm doing basically is we still have leftover Klingons, I like to call them, a group of really nice guys. Some of them have been with me for like 30 years, and they still trade with me. They understand the markets in the sense that nothing is a given, nothing is guaranteed. And they've been with me long enough and they're very happy. They enjoy it. And what we're looking at doing maybe going forward is opening that out one more time, because I used to have a newsletter, and the newsletter was actually trading recommendations when I was with the exchanges. I've worked for all the major firms, Man Financial, MF Global, Refco back in the days, the banks. And it's changed a lot over the years. A lot of people do their own trading now online, but there's a lot of opportunities still in those markets. It's a fascinating market. And the idea of the site is that we have a membership area that we're setting up, and it's pretty well set to go. My buddy Jose in Guadalajara has been working feverishly on it for the past few months. And what you do is you go to the site. All you have to do, you put in your email. That's necessary because if we do anything, we want to notify you that there's a new alert, a new video. That's all. We're not trying to sell you anything. So the membership site is absolutely free. You can come in there. And what we're looking at on there is I'm going to be doing daily or weekly daily or weekly updates on mostly commodity markets, gold, silver, crude oil, the agricultures, all of those, and a smattering of Bitcoin, mostly in the cryptos. That's there. Then starting next month, and we've talked about this, I've had a lot of recommendations or a lot of people looking to do interviews. So we're hoping to get some really good experts in different areas of all kinds, whether it's in the financial markets in the US, it's the housing market or whatever. We're going to get them on as guests as well. And then, of course, we do have our regular, we've been doing for quite a while now, we do online training with futures. I teach private classes, 20 people or more, how to trade futures, how to open an account, all about margin, everything you need to know. It's basically Futures 101. And then we have an options class, which I love. That's the real good one. And that's a basic class from 0 to first level. It's a great course as well. And then I do some technical analysis, meaning that I don't use my own analysis. That's kept in a secret jar on the side, but we do teach technical analysis for anybody that wants to understand chart reading, candles, or whatever. So that's the purpose of the site. And of course, I appreciate you being on here and helping me launch it, because I'm, as you know, I'm a very private person. I'm not a big fan of going out on social media and publishing my
I have to beg you to put a short clip on YouTube, and you're always kicking and screaming. You know, Marty, over the course of our relationship, I've come to, I get up in the morning, I see because I'm kind of behind the markets in Hawaii. I'm 6 hours behind New York in the summer. So I see what the stock market has done that day. I look at cryptos, maybe take a glance at the wheat or corn or whatever I'm dabbling in. And then the first thing I do is call you.
Yeah.
It's like, God, what does it mean, Marty? And so that's a valuable expertise you have. You'll, in effect, people will be able to do that by way of your site. Get when important things are happening, you'll give them updates.
That's correct. That's exactly what we're doing. So there's a big commitment. Once we get going on this, which is this week, we need to continue. So I'll have to do updates on a regular basis, at least one video a week or possibly more, because I think the next 6 months should be really interesting in what I see, Dick. Very interesting, the next 6 months.
So let's go through it to be sure what your site's going to be offering. You're going to get the weekly newsletter with market sentiment, geopolitical, and then you'll have, like, I'll come on and do something with you, or you'll get an expert and be doing segments.
Interviews from different areas as well. That's right. Yeah.
And you're offering your courses.
I'm offering my courses and also one-on-ones, because I get a lot of people that say, look, I don't want to take the course, but I need some advice with regard to your thoughts about going forward, what to invest in. What do you think of these markets? I need an hour or two of your time to look at my portfolio. We get a lot of that. So that we do as well. And that's basically custom tailored. Give you an hour or two. Let's look at what you've got. And then we can analyze from there some thoughts about where you should be maybe looking at going. And again, it's tough. It's hard because I'm not a broker anymore. And there's so many disclosure statements when you are giving financial advice, and it's not financial advice. Basically, it's what I would do. And it's up to you. You make your own decisions. Everybody are big people. So that's what we're looking at doing. And then as we go forward, we're going to add a lot more little things to the site, just kind of a general hangout for anybody interested in commodities and cryptos, and see how the next 6 months works out.
So we're recording this on Saturday, July 16th, and you were just involved with CryptoViewing with this remote viewing that we did of corn futures, like what's going to happen with the price of corn in September. And there are a number of people that are perking up their ears. So will people be able to get a hold of you for a private consultation through your website? If somebody says, hey, I think something is going to happen with corn, Marty, can you help me out here?
Yes. Yes. Providing, now again, I have a certain amount of time slots that are available. It's usually about 6 a week. That's all I do because I have other things and commitments. But yeah, they can do that. It's, they can. Yeah, I shouldn't say anything, but you can try and do it. I'll try and see if it's up on our site. If not, send me an email. Anytime you want to reach out to me, it's just bullshift2020@gmail.com. That'll get directly to me into my hands as opposed to going through the site. So right now, just bullshift2020@gmail.com. Ask me a question and I'll be happy to respond to any questions. Yeah.
All right. Cryptos are always on everybody's mind. What's happening with the crypto market? We're just in a bear market, sideways.
Yes. Now, if you recall, anyone that watches that's on Dick's site understands CryptoViewing, that I've been on there every week. We do a session. And back a while ago, we broke 52,000 after looking. Our target was 72 to 74. We got to 69. And then we started looking ugly and we broke 52. And at that point, we basically said we're going into a bear market. We've been in a bear market. Obviously, everybody knows that. You don't have to be a rocket scientist. And we're still going to continue to be so for the next little while, because it's not just a matter of a couple of days moving in one direction to make a bull market. These markets trend for months and years. So I think we're very, very close to the bottom. My belief in the system is very strong. I'm a big believer in Bitcoin. I believe people should be looking at buying Bitcoin sub 20,000 instead of looking at selling them here. Quite a portion or a fair portion of my assets are in crypto. I'm not doing a lot more. I do have a target, and we can openly talk about it. I think there's a good chance we may have one more strong down leg, and it could get somewhere, according to the charts, 12 to 14,000. We said that way back. So back when we broke 53, go back and look at the tapes. I had 3 targets. We're going to 30, and it did, and it stayed there for a month, then 20, and then possibly 12 to 14. Now, you can't guess exactly because it's not exact. When you get a washout or a big move like that, it can overrun the target on the upside or the downside. But I'm ready in case we do get in that area, and I'll be adding my final bit of crypto. And again, mostly it'll be Bitcoin. I believe right now I want to stick with the really good major tokens that are well known, like possibly Ethereum, Litecoin, Link, those ones. Mm-hmm. And we're not playing too much with the real unknown alts. Although when Bitcoin starts to move, I think there's no doubt that everything will follow. I'm just going to pull up a chart. Do you want me to look at a chart for you, Dick?
Sure. Yeah. And keep in mind, we're recording this Saturday, July 16th, and it'll probably run for a while, so people will be able to look back. And
yes. And of course, as we said many times, we always say not trading advice. So here we go. Let's look at the daily chart on Bitcoin. First of all, let's go to the monthly chart. I'm going to give you a log scale view of it. Here's what we've been looking at for the past few years, going back to, I don't know how far back there, we're going back to 2020. So as you can see here, these stars, this is exaggerated because it's a monthly chart. The breakout area is around this 12, 14,000. We're currently here. Go back to the weekly chart. That's a bit awkward to look at. Here we go. So this is possibly one more bump down into the star area here, which is about 12 or 14. We may not, because ironically, today, we're actually getting a short-term buy signal, short-term on Bitcoin. So we have this nice wedge here, and as you can see it's very well-defined. And the drop to this wedge could be extended, which would take us down to about the 12, 14,000 level. However, if we can get through this top here, our overhead resistance right now is up around the 28,000. So there's a chance we may go up there, but it's going to take a lot more than that before we actually turn positive again. I think we need to get up probably close to the 35 to 40,000 level before it actually turns the corner. So right now, Bitcoin is still in a bear market. And my belief about Bitcoin is that Bitcoin will perform when it needs to. In other words, it's on the sidelines right now. And I believe if the system breaks, which I think it will over the next 6 to 12 months or whatever, at that point, I think when Bitcoin becomes a source of true value, when people realize that we either have hyperinflation or the US dollar is falling apart, at that point, I think Bitcoin will do what it needs to do. And of course, that means it'll start back up again. And I do expect we will get back to the old top and make new highs in Bitcoin over the next, who knows, 6 to 12 months. It's hard to say. We're in a bear market. And you just have to face that. And it's going to take a bit of work to get out of this bear market. But overall, I'm a big fan of Bitcoin. I own Bitcoin, and I will not be selling my Bitcoin anytime soon. I will be hanging on as part of my portfolio.
I've never really watched the dollar charts. And I think a lot of the people at CryptoViewing probably are less concerned with the dollar than they are Bitcoin. But the dollar is very important. And your calls on the dollar over the past few months, you just said it was going to go up, up, up. And do you think we're nearing the blow off top here in July?
The dollar to me is probably the most important one of all the commodities. And it's quite simple. It's because without the dollar, we don't have pricing. And unfortunately, we're brainwashed into thinking that everything we look at, this car is $40,000. An ounce of gold is $18,000. It's always related in dollars. And we've been brainwashed for centuries to do that. What we have to start learning how to do is do more linear thinking, where we're looking at cryptocurrencies like Bitcoin. One Bitcoin equals one average house, 2-bedroom home, or 3 automobiles, or whatever. Because don't forget, guys, we're talking about a fiat currency here, a currency that's no longer backed by anything except the goodwill of the government. And all they do is they turn on, and it's not printing, I know that, but they turn on.
How much goodwill does the government have? You just said it's backed by the goodwill of the government.
Yes. And we can get into a long, drawn out story, but I got a really good one for you, though. I saw an interview just recently. It was brilliant. There was a gentleman back in the 70s, and he was in the process of becoming a broker. That was about 10 years before my time. 1978, 79 were the years. And I forget the gentleman's name. I apologize, but he told the story, and it was very riveting. So he said what happened is they took a course to learn to trade derivatives. And it was an expensive course, and he was working for a firm on Wall Street, and they put him through the course. But at the end of the session, they had they had a special guest speaker, and that speaker happened to be Paul Volcker. The 16th.
For those of you who don't know, Paul Volcker, lose the chart while you tell this story.
Okay. All right, but
Paul
that's
Volcker
I'll show you that in a bit. That's the dollar chart.
He was the head of the Federal Reserve back in the 1970s and 80s when we had massive inflation.
Yeah.
Okay, so Paul Volcker is talking to these budding economists.
Yes, and he's basically coming in to give them their wrap-up talk. And what he does is apparently he takes out a cigar and he chomps it off and spits out the end and puts it in his mouth, and he lights it. Then he reaches in his pocket and he pulls out a roll or a money, what's it called, money clip. And out of the money clip, he pulled out a $100,000 U.S. Treasury note. Now, think about it. This is back in 79. So obviously,
that's a lot of money back in 79.
Yes, everybody was pretty fascinated, the guy says, like they just looked at him. But he said to them, this is not for you. This is for the GOI, which I guess is the general public, right? And this guy, he said, I didn't get it. I didn't even know what GOI meant. So he said, okay, it just kept listening. And then he said what he'd do is he proceeded to take the $100,000 note, curl it up, take a cigar, and he lit it on fire. And he burnt it. And he said, this is not for you. And he gave them all a laminated business card. And he said, on this card, don't lose it. It is the direct line to the top 5 mints on the planet. And he said, when you make this money, these dollars, you take them and you convert them. And he rattled like a half dozen gold coins in his hand. He says, into this. And then, so they were pretty fascinated by it. He says, well, you're telling us to, one guy is thinking like, you're telling us to diversify and get in things. He goes, no, you do not go into this. This is not what you're going to do. So then he pulled out another $100,000 bill. And obviously he got them for free from the Fed. And he took out a dollar bill. He said, now listen carefully to this. He said, this is probably not going to be in my lifetime, but he said, in a few decades from now, and it's been 40 years, he said, this one here, the $100,000 bill, will be equal to this one here, the $1 bill. So the metaphor there, I guess, is real simple. Paper is paper. Money is money. So I thought that was quite interesting. So anyway, the US dollar, let's go back. I want to show you the chart because I'm very proud of this one. This is one that, as you know, since the day I came with you, this was back here. And if you go back to March of 2020, this is where I started with you. And we marked it and we said, this is the bottom of the dollar, because everybody at the time was saying the dollar is going to die and everything else. And I said, I don't think so. So at that point, we had a few targets. The first one was par 100. And then our big one was 108 to 112. This week, we hit 109.50. There's the zone, 108 to 112. We are there. But you'll notice this is becoming very parabolic. Now, we had a pullback. Here we suggested we got the 105. And you remember this, go look at the videos. We said we should pull back to about par again to retest it. We did that. Now we're back to 109. Here's the problem. So this one pattern that I have adopted that I love, that works about 80% of the time. If I look at this, I could say it is already completed, which means it doesn't owe me anything. It could turn around from here and crash. It's completed. Yeah. However, the wave that we're in suggests that we could go higher because the wave itself is not completed yet. It could be, meaning that it's completed, but there's no definition on how high these next few candles could go. So from here, what I'm expecting is potentially, this will make it the day one, potentially we said the other day with you, we said a pullback. So there you go. You've already got a bit of a reversal and a red candle. So I could see it comfortably getting back to about the 105 roughly area and restarting over again. Okay. That's what I think. Now, if it gets back to the 105 and things get out of whack and things start going crazy, this could turn into a bear market here. We don't know when it's going to turn. I'm suspecting we're not finished yet, but we might be. But let's keep an eye on it, because if it gets through again and continues, it's going to make one vicious run, and we can be looking up into the 120 or higher, which is the old high. If you look at the monthly chart going back here to August of 01, Dick, at 120. But you see how it's going parabolic here?
Yeah.
This is, in my opinion, that is basically the last kick of the cat, the last hurrah. And we don't know whether it's going to last 1 month, 2 months, 3 months. It's hard to say, but I believe it's in its final blow off days. Okay.
So yeah, what goes up has to come down. When it does come down, when it corrects, how's that going to affect commodities or cryptos?
It's going to affect them. Okay, so let me just...
let's back up.
Yeah.
We know that the strong dollar makes precious metals, gold and silver, weak.
Okay, so let me just back even further a bit. We have to understand what's happening here with this dollar. We have emerging markets right now, just like Sri Lanka just happened. These countries that are in debt up to their eyeballs, and all of a sudden this black swan event comes out of nowhere, which is COVID. And like the rest of the world, they behave themselves. They do what they're told to do. They shut their businesses down. A lot of these countries depend on, say, things like tourism for their income, and that's gone. So what's happening is they're getting deeper and deeper in debt, and a lot of this debt, because of the U.S. dollar being the world's reserve currency, is based in U.S. dollars. Unfortunately, it has to be paid back in U.S. dollars, which creates a bit of a demand for U.S. dollars. But then the problem is now the U.S. Reserve decides, or the Treasury, we're going to start raising rates here to fight inflation. That's a double whammy, because a lot of these countries can't pay normally, and they're starting to default. And Sri Lanka is basically gone. They've defaulting. We've got China with bank runs over there. We have turmoil everywhere you look, whether it's in Britain with the the prime minister over there.
Boris,
we got that war happening in the Ukraine, Russia, which could really...
And that's going to spread. That's going to spread.
And so what's happening is you got a fiat currency, which means basically the U.S. dollar, which is the best pig in the whole lot. Like what they call it, a pig with lipstick. Like it's there, but it's the best of a bad lot of anything. Yeah. So the fearful money is exiting places like Europe into the dollar, because of the demand for the dollar right now. And going forward, I'm getting ahead of myself, but going forward here, if we escalate in the next few months in war, meaning that Russia decides to do something more severe, all of a sudden we're looking at the euro currency, which is teetering on breaking. And if that breaks, I mean, that's a lot of countries tied together under one currency. And it was only ever an experiment. It's not really doing that well. Traditionally, that euro is up around 125 to 150 for every US dollar. So it's worth about 25 to 50% more than the US dollar. Today, it's sitting right at par.
Parity, yeah.
Right at par, yeah. So what happens here is that's a very psychological number. People are going to say, oh, it's at par. It's not going to go below there. So we should be seeing some kind of a bounce here in the euro currency, which would also lead to a pullback in the dollar. So that makes sense, doesn't it?
Yeah.
So again, the problem is when you look at gold, and we've talked about this on your channel many times, people say, oh, gold is up or gold is down. Gold is nothing. Gold is a lump of yellow metal sits on your desk. And what happens is the amount of money it takes to buy it is what changes. So if the dollar is strong compared to our dollar, it takes less of your dollars to buy that same ounce of gold. So the gold will be quoted much lower in US dollars than it is in Canadian. Right now, if I look at, I'm going to show you another chart. Let me pull it up here. Okay, the euro, here we go. Okay. This is, can you guess what chart that is, Dick?
That's gold to the euro.
That's gold to the euro. Looks a lot different than ours, doesn't it?
Yeah.
So again,
gold has been going up in price.
Oh, it has. And the thing is, people just really got to learn to think a little bit differently. Because it looks like gold's going down, it's not going anywhere. The dollar is strengthening because of a short-term squeeze on the upside of the dollar. And I think it's going to continue for a while. And as long as it does, when you quote anything, commodities, including grains in US dollars, it takes a lot less of those to buy that basket of goods. So it looks like prices are falling when in fact it's just the dollar strengthening in relationship to other worthless currencies. Make sense? Yeah.
Wow. It does make perfect sense, Marty. I have an air conditioner going. I turned my mic off while you're talking.
No
Sorry
problem.
about that.
That's okay.
So is the perfect storm coming? That's the question. I mean, you took out the term bull shift 2020 back in 2019 because you knew commodities were going to make a run. Is this perfect storm? Where's everything going? What's your...
I think the perfect storm is here, but my personal belief, and I think we talked about this also, is I believe things are breaking purposely. There's so much manipulation here. Yeah. And then we get into things like inflation. There's another topic. Okay. So when I look at inflation, there's a couple of scenarios here. Okay. Is the inflation here because rates are low, or is the inflation here because somebody or some group of people artificially disrupted the supply chain so that there's a shortage of goods? This shortage of goods have the same number of products, but a lot more money chasing after fewer products. So what happens is supply and demand situation is if you've got a lot of money chasing after a few goods, the price goes up. Make sense? But then on top of that, to exasperate things even worse, the Federal Reserve is expanding the monetary base like threefold or more. So now you've got much, much more money chasing after the same amount of goods. So we've got a situation where we're getting major inflation. Now, going back to the story I told you about before, there was one key pointer I wanted to tell you, the gentleman that was up with Paul Volcker. When Volcker broke the back of inflation, what he did is he jacked rates to an all-time high, an intraday high of 21.5%. I think the number you'll see is 20, but it actually got to 21.5. And what happened at that was very interesting. It broke the back of inflation because let's face it, when you put a country in a recession, people lose jobs, people get fearful, people stop losing money. They're not purchasing as much. There's not as much demand. So the supply has a tendency to grow back again. So that causes inflation to drop. Okay. But what he did do was interesting. He started up here at 21.5%. And I remember, I think when I bought my first house, I was up in.
Me too. Yeah. Me too.
And it's gone nowhere but from 21.5, basically down to zero. And in my opinion, I believe what they've done is use that mechanism to control inflation all the way down.
I heard someone, a commentator just today, that was referring back to the Volcker years and said, if the Federal Reserve, I don't like to call them the Federal Reserve, the banking cartel, private banking cartel that makes fiat money out of nothing. Anyway, if the Federal Reserve was really going to break the back of inflation, if inflation is 7%, they've got to raise interest rates to 7%. Volcker proved that. Yeah. So if they raise, if if inflation is 10%, 11, it might be 20, 21, 25.
Yeah.
If they raise interest rates that will collapse everything.
That's right. That's correct.
But if they don't raise interest rates, then inflation will go out of control and that'll collapse everything. So
yes. Now there's another theory that people have talked about on here, and I've had a few private emails, and it's called the bullwhip or something like that. I remember saying it. That's a different situation, because what they're talking about there is we've had 2 years to try and replenish the supply system. And the theory is, and I think it goes back, someone mentioned about to what's his name, Michael Burry. Yeah. I haven't read it, but somebody had told me that's where they heard it. But the theory, I don't think it holds much water. But the theory is basically that the supply chain has now been replenished. And unfortunately, because of the rate hikes, the people have lost their wealth effect. Like I know in Ontario, I talk about it. The housing market is your wealth. A lot of people have lost a lot of wealth. So what happens is you freeze up, you stop spending. Well, of course, now the Walmarts and the Kmarts and the Targets and the Amazons are feeling it, because people are saying, wait a minute, I've lost 100,000 of my house. They stop spending. Now, these stores are blocked up because they got their supplies back in their stores and nothing is selling anymore. So now the fear is they're not going to make their profit margin that they're expecting. So what happens is they have to start slashing prices. And now you got a competition on the other side where they're basically almost giving stuff away because they can't get people to buy. Yeah. People won't buy. And they're having to get rid of their inventory to get their money back or to make their profit margin. So that's a convoluted, kind of a complicated thing. And it would have to be a perfect storm for that to work. But yeah, that's another theory that could happen. So the Fed always has a tendency, in my opinion, to overshoot.
Just off the top of our head, do we know anybody that just sold their house recently? Oh, that would have been you. Since you sold your house, what happened to the real estate market in Canada? You got out right in
a few things, actually. So I got out in February. And again, I used my numbers. I just said it's time to get out, because we sold one house last year. It was our summer home, and it was too early. But this one we got out in February, and now we're renting a beautiful condo in Guelph because we figured it's time to get out. But a lot's happened. Rates have gone up 3 times. The last rate pump we had this week was 100 basis points. So we're in the same boat. We've outed you guys. You guys went 75. We've gone 100. Now they're talking about the Fed going 100 on their next go round, which is in another week or so.
Yeah, you called me the other day and said, "Oh, they raised interest rates a point," and I went, "Oh, the Fed raised it," but it wasn't the Fed; it was the Canadian version.
Yeah, it's the Canadian. So with that, what's happening with our market? Like there's a town here, I told you about it before. It's called Oakville. And these guys do these numbers from the Canadian Real Estate Board, and they show every week they do it. And the average price of a detached home in Oakville is down $600,000, down $600,000 since February.
You did great selling your house.
Yeah, I'm comfortable. I don't want to get too cocky, but yeah, I think we did okay. We did fine. Yeah. We did good. Yeah. So we're going to set it out for a while because, again, it's a money trap. And I always believed that that's how they get you. They bring the rates to zero, people up over their head. Then you get this. We've had basically a balloon, or what do they call it? Yeah, the balloon or a bubble for at least 2-3 years here. We've been up like 20 to 25% year over year. It's crazy. Yeah. So anyway, that's what's happening with regard to the dollar. And I do believe the dollar will succumb to gravity, but you got to wonder here. The plan is to try and bring in the new system. Are they going to make the ice flow jump, or are they going to miss it? Are they going to fall flat before it's ready?
Well, a very wise source who's been helping me for the past 5 years told me 5 years ago, we are in the transition to a new financial system. It's going to be a digital financial system based on distributed ledger using a digital ID, and everything that he's predicted to me privately has come true one by one by one. So with that and with your charts, we're going into really interesting times. Yeah. It's going to be
uncharted territory, Dick. This
uncharted territory. So folks, you have Marty Hibbs here, whose experience and expertise reading the charts is really, really valuable. So his site is going to be a really good resource for you as you try to navigate these amazing, unprecedented times
and opportunities, right? Yeah.
There were multimillionaires made during the Great Depression, and this is going to be the greatest transfer of wealth in history. And if you do it right, you'll be able to get into a little of that flow as it goes from one thing to the other. Cryptos, commodities.
Yeah.
Yep.
And again, like the equity markets, now we didn't look at the S&P, but we were pretty close. I think we called the top within a week or two of that top. Remember, we were buying those put options.
Yep.
And now
okay, let me, for those of you that haven't followed it, every week I did the analysis with you. We were doing it every Sunday.
Right.
Sunday or Monday. And every week I was expecting the stock market to fall. This was about the time Joe Biden took office. For the first year, it was up, 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 up. And finally, a while back, you said, I'm going to get some puts. I'm going to short this. I'm just going to put a little money on it. And you called it. It was like nobody expected it to make that run. And you called the top on that one too.
Well, so far, so good. I think the back's broken. I do believe, though, we will have another rally. I think we could have it from this point. I'm hoping we will over the next few weeks. And if we get back up, I'm looking for something up above, I think around 42, 4,300 on the S&P. I will be venturing to do some more put options on it. The options are great. Like even with this grain situation we got happening here, you can't afford to actually go out and trade the futures contracts because of the absolute severe, unprecedented volatility that's going to be created. Especially, see, a lot of people, like we were talking the other day, there's a few points I forgot to make. I wanted to, but I don't have a cheat sheet in front of me. One was that when you get into the contract month, there's no limits on it. So if you have something severe happen to the corn situation with regard to too many people not delivering and being short, they have to get out of that contract, whether they cover it, which means if they're short, they got to buy it back, which adds fuel to the fire. Or, and if that's the case, the thing could run $2, $3. I mean, has never done that, but it could, because there is no restrictions on the contract cash month. There is only on the futures month. And once you get into the first day of that month, you're now in cash territory. And you'll get a notice saying, basically, get your ass out of here if you're a speculator, because if not, you could be assigned a contract, right? So the volatility is going to be severe. And again,
this is corn options. This
is corn and soybeans and wheat right now. And they've had the pullback. You and I got out almost a year ago. It was we were at $13 and change on wheat. We got out, and we said we're going to wait till it gets back to 8. We're back right, very close to 8 right here. So there's an opportunity. So when we tie it together with your remote viewing that you just did, and I look at that, that's really exciting, almost too exciting. But we don't know for sure if it's going to be September. It might be September a year. It might be this year. It could be. So I look at it this way and say, okay, am I willing to spend this many dollars? Yes, I am. That corn 2 months ago was at $7.50. So even if corn goes back to $7.50, which is where it was in May, you got $1, which is $5,000 profit on a $250 investment.
Yeah, we're going to buy a few of those.
I think so.
If people want more information, they can contact you through your website, and you'll hold their hand through that.
We're planning on announcing. Now, we haven't done a course for a while. I think the last one we did is when I moved back in April. We're looking at doing one hopefully before the end of the summer, which would be about 5 weeks from now. And I might even just do one on options, because there's a lot of people looking to do for the one on options. So if they know a bit about the futures, they might just want to do the options one. But you know what? The bottom line is there's nothing for certain. And if it doesn't move, it doesn't move. But there's certain bets that you look at and figure, hey, this is a well-calculated bet. And I think I'm going to be in on it personally. So, and I think you are also.
With the situation the world is in, how can corn not go up? Wow. Mm-hmm. I don't know. There are manipulators. They could manipulate it down, but common sense.
Yeah. There was one other article, one point, it's not a big deal, but when Edward did his second piece, I wanted to talk about that. And of course, again, with no script, where he starts seeing mechanical thing in gears. And that's really interesting because now you're talking about a different angle. This is about food processing, I believe he's talking about. And there's been a rash of fires and things that have happened in these mills and refineries and that. And I'm not sure what the situation is, but I'm quite certain that there's a lot of maintenance issues to do with parts. And if they don't have the parts for these grist mills or whatever they're called, where they grind and process the food, that's probably going to play in. Maybe that's what he was saying. There are problems with the downgrading, which would be the downgrading of actual food grade corn down to feed, something like that. So like, I couldn't believe how much good information there was in there. That just got me excited. So anyway, I'm looking forward to it. I will be doing our session as usual, Monday nights. And I plan on doing a lot more commodities on mine, but I'll touch on some of the cryptos.
Well, and you'll be heavy into commodities on your private site here, so
yeah, I will be. And of course, if they go into the page bullshift2020.com, just put your email in, and you'll be notified the minute a new video goes up. So I'm looking forward to it. It should be fun and exciting, and get me out of retirement.
Yeah. Well, as I said, we're going into really uncertain, volatile times. As Marty says, fasten your seatbelt. We're going into volatility. You need as much good information as you can get. And Marty has a track record with CryptoViewing and throughout his career of providing really good information. So
thank you, Dick.
Past performance doesn't promise,
it's not indicative of future performance, right?
But still, you have a very good track record.
Well, you know what? I try and figure I'm doing it. I'm retired basically. But I'm doing it because I really enjoy if I can help somebody else doing it. I just feel that way, right? I do.
Oh,
that's why we're not.
I love your early morning calls when you set not a goal, a projection. You make a prediction like S&P is going to hit here, or Bitcoin's going to hit here, or the dollar hit here. And then it hits that morning. You call me up. Did you see? It hit exactly. It hit within $1. Yeah,
like a kid in a candy shop. Yeah, I love it.
It's good stuff. All right, Marty. Always great talking with you.
You too, Dick. It really is, and I appreciate your time.
Soon.
Introduce me to the rest of your friends and the rest of the world.
Yep.
All right, sir. You have a great day, Dick.
Have a great one.
Bye bye.
Always good to talk with Marty. He is a regular feature on our private site, which is accessed at patreon.com/cryptoviewing. He has a weekly segment where we chart all the major things that we need to be involved in this hectic switchover of the financial market. The dollar, S&P, precious metals, gold, silver, and cryptos, all the main cryptos. We look at them every week, and we come in with special reports as the markets get hot and heavy. And we think things are going to be real wild over the coming months. Aloha.